Hey guys, welcome to this week's edition of the Swyftx Squawk. I'm Pav, lead market analyst here at Swyftx, and this week we're going to dive into, in the face of volatility, we're still seeing some marginal buyers enter the crypto market. We've even seen ETF flows start to flash a little bit positive, but while we still remain largely unsure on what's the direction of oil globally, there's obviously some concerns there locally and abroad on that whole front. We also don't know how long the tensions in the Middle East are going to continue for. But there are some things that we do know ring true about crypto in the last week or two that we're going to cover in this week's edition of the Squawk. We're going to dive into some of the news, some of the trends that you may have missed just because the noise, it is just a bit thick at the moment, and that's just unavoidable. So let's dig in. Now, just to cover the market quite briefly, we have seen, recording today on Friday, a bit of a move higher across market assets. Even the likes of Dogecoin, Solana, and Ethereum in the last 24 hours starting to show some life. But again, we do approach the end of the week, so we do look to see how those assets start to perform as we head into Monday morning. Now, as I mentioned, we are seeing some of the corporate players in the space start to really lean in right now with their capital. As of recently, we have seen Strategy deploy funds back into the space, adding to their Bitcoin holdings, but as well as Bitmine, which is led by Tom Lee, a well-known CIO at Fundstrat, and also chairman of Bitmine. Now, he came out stating on stage during the consensus at Hong Kong recently that he believes we're nearing the end of mini crypto winter. So there is some marginal buyers out there that are putting their capital to work, even with the markets being down as far as they are. Now, that doesn't mean that price has to turn around to the upside immediately. Obviously, what we're seeing right now may be a positive sign in that direction, nor is this a prescription to follow in the footsteps of the likes of Bitmine or Strategy. But it does again give us that idea that there is conviction around certain corporations that isn't really disappearing even in the face of the market being down circa 40-50% across some of these assets from the all-time highs in 2025. So aside from the long view of institutions, there are some other narratives that are coming to the surface right now that might also be proving favorable, some other tailwinds for the Bitcoin market specifically. Now, just last week, Bitcoin has passed a very remarkable milestone with more than 20 of its fixed 21 million Bitcoins now having been mined. So that leaves less than a million for the world to now see be issued for Bitcoin. And if you haven't done the calculations yourself, I can save you the hassle. The current expectations are for the last Bitcoin to be mined in the year 2140. So that leaves us just over 100 years for the remaining 1 million Bitcoin to be issued. Now, this is impacted obviously by the use of the network and a couple of other things. But overall, it's just a nice refresher that Bitcoin as an asset class, it is scarce. There is only a limited amount out there. And we're about to head into a deeper innings with the next halving coming up in 2028, where we'll see the amount of Bitcoin mined every circa 4 years, reduced by 50% again. Now, if a lot of this isn't quite making sense, or you're a little bit unsure on the details of the Bitcoin halving and what's so special about Bitcoin being fixed supply, we do have a guide here for you. What is a Bitcoin halving that you can check out on Swyftx Learn. Within 5 minutes, you'll be a pro. But it is, again, just a nice little throwback to the fundamentals that while prices obviously been moving to the downside, the fundamentals, they haven't changed at all. The reason to buy Bitcoin 4 to 8 years ago, it's still ringing true today. Now, on the topic of Bitcoin and mining, I thought we'd look at the Puell Multiple for this week's chart of the week. Now, you may or may not have heard of this indicator before, but essentially it's a nice stress gauge for understanding how Bitcoin miners are performing. Now, Bitcoin miners are a pretty important player in the market to try and understand. They obviously generating new Bitcoin, but are also one of the largest marginal sellers out there on the market. They're naturally looking to cover their costs, pay for power bills, pay for hardware, operating expenses, all that sort of stuff. So they have to sell their Bitcoin to be able to do that. This is a chart from Check On Chain. It's the orange line here down the bottom. But essentially, when price is high, it obviously means that these miners are very profitable. But when this does capitulate and fall to range lows, that's when we do start to see the bottom of the market cycle usually be the point at which miners are performing the worst. What's also notable, if you look back to 2022, we did see this particular indicator bottom out, but the market still moved lower. And that's a sign of what we'd call divergence. And if we look at where we are today, we're still potentially nearing the bottom, but potentially not quite there yet. And if we do see a situation where we do see divergence across these two again, which we don't know if it's going to happen, but we can be on the lookout for it, it does suggest again that while we're getting close to price potentially reaching a bottom, it could still take a little bit more time for us to reach that moment where the Bitcoin market cycle is ready for a move higher. So obviously we're seeing two sort of ideas of, while the longer term, we're seeing people in the space, institutional players, happy to continue purchasing. There is still that narrative that in the long run, we've still got a little bit to go. So obviously time will tell. But that's it from me here today at Swyftx. We'll be back again next week. Catch you later.